If an investor is offered to buy your Las Vegas home by taking over your mortgage payments, do not sign anything until you finish this video. That offer is called a subject to deal. And right now, it's one of the most aggressively pitched strategies in the entire Vegas Valley. So some of these deals are done honestly, and some of them are designed to take your equity and leave you holding all of the risk. So by the end of this video, you're gonna know exactly how these deals work, why you're being targeted, and how to tell a legitimate offer from one that could follow you around for years. I'm Jacob Ballou, a Las Vegas real estate agent, realtor, and I look at deals like this at the property level with real numbers and not just headlines. So let's break this down the same way. So here's what subject to or sub to actually means. You sell your home, you sign the deed over to the buyer, but your mortgage doesn't go anywhere. It stays in place, and more importantly, it stays in your name. The buyer promises to make your payments, but they never formally assume the loan, and your lender never approves any of it. So you give up the house, but you keep the debt. Now think about why an investor would want that. So if you bought or refinanced a few years ago, you might be sitting on a rate near 3%. Today's rates are roughly double that. So your loan is an asset, and the investor wants it. Instead of paying off your mortgage with the expensive new financing, they ride your cheap debt, often while putting almost no money into the deal. So this is not automatically bad. Subject to is a legal strategy with a long history, and for sellers with almost no equity who need out fast, it can genuinely beat some of these alternatives. But you need to understand the 3 risks that you carry out the door, because nobody pitching you this deals leads with them. So risk number 1 is your credit. That loan stays on your credit report. So if the buyer makes every payment on time, great. But if they stop paying, those late payments hit your credit. And if it goes all the way to foreclosure, that foreclosure is yours. So you can lose all your credit over a house you no longer own and cannot control. Risk number 2 is your next purchase. So because the loan is still in your name, most lenders count that payment against your debt to income ratio. So when you go to buy your next home, whether that is here in the Valley or anywhere else, that old mortgage can block your approval for years. Risk number 3 is the due on sale clause. Almost every mortgage written in America gives the lender the right to demand the entire balance the moment the property transfers without their approval. Lenders rarely enforce it while the payments are current, but rarely is not never. So if that loan gets called, the full balance comes due and the name on the loan, that's yours. So how do you tell a legitimate sub to or subject to deal from a dangerous one? A real deal has 4 ingredients, and I want you to write this down. Number 1 is a Nevada real estate attorney reviews the docs on your behalf, not the buyer's attorney, yours. Number 2, the closing happens through a licensed Nevada title and escrow company. If anybody asks you to sign a deed at your kitchen table or at a notary in a parking lot, that conversation, it's a wrap. Number 3, third-party loan servicing. That means an independent company collects the payment from the buyer and sends it to your lender, and you can see every payment in real time. If the buyer refuses this, ask yourself why. Number 4, full written disclosure of everything that I just told you, including exactly what happens if the buyer stops paying and exactly when the loan comes out of your name. A verbal promise to refi someday is not the plan. It's a hope with your credit attached to it. So let's talk directly to anybody who's watching this who is behind on payments, because you are the number 1 target for these offers. When you fall behind in Vegas, the letters and the text messages, they start fast and they all sound urgent. So here's what they don't tell you. Home values across the valley have climbed for years, and many homeowners in default are still sitting on 6 figures of equity. So if somebody takes your deed, catches up a few payments, and hands you little or nothing for that equity, that is not a rescue. That's a transfer of your wealth to a stranger dressed up as help. And you have more options than you think. You may be able to reinstate or modify your loan. So if you live in the home, Nevada has a mediation process for foreclosures. I deal with foreclosures all the time, and in many cases, the strongest move is the simplest one: a properly marketed sale, even on a tight timeline, where the loan gets paid off, your credit gets protected, and your equity goes in your pocket instead of an investor's. So here's my bottom line. Before you respond to any letter, any text, or any knock on the door, before you sign anything, know your numbers, know what your home's worth, know what a real sale would put in your pocket, and know how much time you actually have. Once you know those three things, nobody can pressure you, because pressure only works on people who do not know their numbers. So if you're anywhere in the Vegas Valley and you want those numbers, please reach out to me. If you know somebody going through this process or being targeted by these people, send me a message. The conversation's free, it's confidential, and there's never any obligation to work with me. The link is in the description below. If this video helped you, please share it with somebody who needs this, who has been getting these letters on their kitchen counter, who's getting blown up with texts, phone calls, things like that, because they need to see this before they sign anything. Subscribe for more straight talk on the Vegas market, and I will see you guys in the next video.